This is a lot of information on the stock market itself. That's this over here. Number one teaches you all about the stock exchanges, the Dow Jones, what it is. Dow Jones is an index, okay? It's right here. It's one way of measuring the stock market's overall direction. The Dow Jones is includes the prices of the 30 most actively traded stocks. That's all the Dow Jones is. You can't buy the Dow Jones stock. It's an average, okay? It includes the prices of 30 stocks. These are the 30 stocks that, well, this is not all of them. This is just a screenshot of some that it tracks. You'll see Apple is here. So if you want to, that's just a good indicator if the stock market's up or down. The S&P 500 obviously tracks 500 stocks, and the NASDAQ includes more than 2,500 U.S. and international equities, okay? And there's some examples here. The S&P 500, this is Standard & Poor's. These are the largest publicly traded companies in the U.S. And these are the highest weighted in that S&P 500. So these are companies that you know and love and that you likely use. Perfect. All right. So you can see this is even from 2010 to 2019. Those are some pretty darn good rates. Wouldn't you say? You really can't beat that. Bonds throw off interest. So remember we said interest is taxed like wages, right? So bonds tax, you get taxed like wages. It's best when you're building out your portfolio to put your bonds in those tax deferred vehicles like your 401k. So if you're going to hold bonds, don't hold them in a brokerage account like we're going to walk through opening today. You want to hold those in your tax deferred, your 401k or your 403b, because that way you're not going to pay tax on it until you retire, okay, and actually live off of it. All right. Any questions about that part? We're going to move on. Questions are good. Thumbs up.